So on average, to register a company, like you said, takes 2 days. Business bank accounts, you can have those two things set up within 5 days, roughly speaking. Deregistering requires being registered with SARS, being able to submit outstanding returns, then getting the clearance, then sending the clearance to CIPC. CIPC does the deregistration on their side. They send confirmation. You get confirmation of deregistration from CIPC, which you send to SARS. That entire system is a 7-step process, which can take anywhere from, I'd say, give or take, 5 to 12 months.
Welcome everybody to another episode of How Would You Build It? It's number 40, Rainier. Welcome back. Nice to have you with us again.
Thanks, Bobby. Good to be here in the 40s.
I remember that we spoke about age once upon a time. I think now we're kind of we're a bit closer to our numbers and the
We've done more episodes than my age, so I don't know. I guess we're growing up.
Slowly but
nice.
And yeah, like really excited. We've got Andre Botma. He's a tax specialist, a content creator. He's got thousands of followers. He's been on SAFM, he's been on SABC, helping the nation understand tax. Andre, thank you for joining. Great to have you with us.
Thanks so much for having me. It's always nice to hop on a podcast and share some value if we can.
Yeah. And it's interesting because tax is just something that people just don't like talking about. And it's just always about the big brother following you and trying to get your hard-earned cash. But obviously you want to steer the conversation towards what does it mean? How do you set yourself up as a small business or a startup in South Africa? And I think one of the things that people tend to do, and I've made that same mistake myself in the past, is that you run to the CIPC, you register your company, and you haven't really validated your business idea yet, but you've got a registered company. So I know you've got experience and insights in that. Do you just want to tell us what are those things that people should be looking out for in that situation?
Yeah, I mean, the first thing that I would say is if you're literally starting with an idea and you haven't made your first sale, and it's not a business-to-business contract that you're about to head into. So this is literally you just want to sell something, you have an idea, is to start as a sole proprietor. It's the easiest because you don't need a CIPC registration. You don't need a separate bank account. The bookkeeping is done easily. You don't need a registered accountant to do the finances for you. So it's easy to get going. I think once you are more established or you want to run what I would call a bigger business, so to speak. So you've landed a contract that's worth 50K a month and it's going to run for 2 years. And so there's either the idea has worked before and you potentially have your ducks in a row. That is when I would say go the CIPC route. Get the accountant, because you can't do your books internally. If you do internal books, you have to make use of an external accountant. Otherwise, and then the accounting becomes expensive if you do your own books. So just to start off as and I'm not even talking about a tech startup. If you want to just start selling something, the easiest way to do that is in your own personal capacity. You trade as yourself. The only major danger is if you are going to run into a lot of credit issues, then all that credit is going to sit in your business. And if your business becomes big and it fails, then, there's that claim. But that's where the protection of a separate entity comes in. But that's what I would say for people just starting out. They just want to get the ball running with what they have in mind.
So Andre, I mean, that's really good advice, but I think for the non-financial people, they often think, but is that something I need to do? Is that something I need to set up? Like maybe just expand a bit on sole proprietorship. Is it basically just me sending an invoice and getting money into my personal account? Do I have to have a business account? How does that work?
Exactly. So there is no formal registration. So you can literally create an invoice on Zoho Books. There are invoicing platforms, even on Excel. And then you put your name and your surname trading as Andre Shoes. So if I'm a shoe store, I trade as Andre Shoes. I put my personal bank account number, banking details on the invoice. That's fine. For us accountants, we generally prefer you to have a second bank account where your business transactions go through. This is regardless of whether you're running a registered business with CIPC or a sole proprietor that you just turn the switch on by sending out invoices.
Yeah, and I think what was super interesting also is why to follow this route, right? Andre, I mean, for those people that know you already on X or Twitter, you did a piece on, deregistering a company, because it turns out, and we've done this, so, like it takes like 2 days for you to like register the CIPC, you get all your details and blah, 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 blah. Again, like if that business doesn't go off the ground, you've now stuck with this thing, you forget about it. But now SARS sends out SMSs and starts telling people that you're going to get punished for not registering your thing. And then you went and uncovered this laborious thing about deregistering. Do you just want to tell us your findings?
Yeah, I mean, I've been in business in tax for 15 years, and it is a thing in South Africa that South Africa have made really easy to start a business. You want to open a PTY, click on register. It costs 150 Rand, but I think that is where the information behind the scenes needs to come out, is to say, if you want to close things, and it's the same, if you have an account with Vodacom, how long does it take to not start the account but close the account? How long does it start? How long does it take to close a business that you're no longer using, that's no longer trading? So on average, to register a company, like you said, takes 2 days. Business bank accounts, you can have those two things set up within 5 days, roughly speaking. Deregistering requires being registered with SARS, being able to submit outstanding returns, then getting the clearance, then sending the clearance to CIPC. CIPC does the deregistration on their side. They send confirmation. You get confirmation of deregistration from CIPC, which you send to SARS. That entire system is a 7-step process, which can take anywhere from, I'd say, give or take, 5 to 12 months. Now, it's easier to say 6 to 12 months, but I've heard cases of shorter. But so to deregister a company takes about 6 to 12 months. And it's just because the institutions have been built on efficiency to begin a process and to allow doors to open, but not to close doors. SARS and CIPC don't talk to each other when there's talks about deregistering, or if you want to notify them that you've ceased to be trading.
So when I read your Twitter thread or your X thread, I don't know what they're called anymore, but you spoke about like the whole thing is that you have to sort of FICA your business with each other so that they can, I think that was a great way to kind of get people to understand why they need to do that, so that you need to be FICA'd on the separate systems.
Yeah. So what happens is, and I heard from my governing body, the reason why you have to FICA yourself with SARS before you're able to do anything for your company that you just registered is they want to make sure that the person who is running the company or responsible for the company cannot distance themselves from the tax responsibilities of the company. So you FICA yourself with the business with SARS, and then you're able to and then you can tell your tax practitioner, submit my stuff, but it means that you have linked yourself to the business. So what happens is when you register on CIPC, they can see who's the director, but SARS doesn't necessarily know that you are the director appointed, number one, and number two, that you are the correct public officer, the person who would be representing the company. And that is what that's why that SARS process is sitting there. And that's one of the elements that takes a while. That takes about a month. Unless you know special people at SARS, it takes about a month to activate yourself as a representative of your own company.
Sure. So Renier, I mean, you've probably seen a lot of these kind of situations, where people are, I mean, we've had conversations on the podcast where people have had to, exit their business and stuff. I want to get into kind of scaling But any thoughts so far, Renier, in terms of, the experience you've seen when people are dealing with these challenges with the startups?
Yeah, it feels normal. Like, and even some people would give you advice to go, first step is start a business, open a bank account, get a business card, get a logo, build a website. They say do those things, but it's also, one thing closing it down. It's also another thing, just the operational aspect of closing it down. As soon as you start employing someone and now you want to close it down, that's not that practical, because if you still have contracts running, you need to deliver the work, you need to pay a retrenchment package to the employee, but you still need to deliver the work, then you need to stop the work. So timing all of those things together with this deregistration is a mess. So I think the first thing, be really sure that you're in it for the long haul when you create a company. Like you probably, it's going to be something that you probably carry for a very long time, if not until death do you part. So I'd love to dig in, Andre. I mean, for a tech startup, like, I work with a lot of people that go, cool, I have an idea, let me build some tech. And then they built this tech, but they didn't register the company first. Now they register the entity, but now a lot of time and money has gone into building it up to that point. Like, how do you establish it in a way that still is fair and representative of those who have made contributions pre-establishment, when it was a still proprietorship? And that could sometimes be multiple parties. And how would you set it up right if you start as a sole proprietor and then move into a company, given then there's a bit of background and context going into it?
I mean, I'm a big fan of, and I've stepped on many, not stepped on many toes, but I've stepped into what they call a sinkhole of sand, and then it's a slow sink because you go into with the wrong business partners. So what I love about sole proprietors is you can be very flexible in terms of commercial law of what the economics look like. So if you've partnered with somebody and they're very much with you in this thing, you can easily do a revenue share contract just to start off with and see how that goes. With a revenue share contract, it isn't as airtight as a classic business-to-business service level agreement, but it is something that keeps it two parties, and you have it done by a lawyer. And so if something happens, even as a sole proprietor, there is still that contractual obligation between separate people. And either revenue share or a profit share, and it's easy to later on change the contract and say this is now a proper business-to-business contract. It was in my personal name. You redo the contract with the same terms. Because the other thing that you don't want to do is you don't want to launch a PTY. You have these partners, but then you sign a thing that's equally split, 30-30 or 33-33-33, or it's 50-50. And those are the worst business share structures that you can do, because it's never 50-50. It's always 70-30. Or it's always 75-25, and the reason being is there's always one Kunane who's doing most of the things and doing most of the rainmaking. So that's why being a sole proprietor and having an agreement on rev split just to test the relationships of the first, let's say, 3 to 4 months or a year. How does these things run, so that you have a track record, and then you can say, okay, we're doing this thing in a PTY, but these check boxes need to be ticked. Yeah.
So I actually want to get. It's not good. I don't know, Andre, but I mean, when we speak to a lot of these founders, we find out that they're actually registering their companies overseas, and we know that you've got these offshore tax havens as such, your Maltas and Delawares and so forth. What's your take on that whole situation and seeing a lot of sort of South African founders registering their companies overseas?
I mean, it is a thing. I think if it's done within the right context, it absolutely makes sense. If you're sitting on cash injections from investors, and you already, you basically pre-money startup, and you pay a management accounting firm in Mauritius to set your structure up, because you want to have your management of office outside of SA. Completely makes sense to me. The same thing with the Delaware. If you for some reason want to tie yourself into America, and have a quicker, and perhaps with the American entity, you can have an American bank account, which might make things easy from a payments point of view, so to speak. There are reasons to do it the proper way. I always refer my clients who want to have that international, who want to do a foreign company setup. I send them to the management accountants that deal with those things on a day-to-day basis. The one thing I would be careful of is if you're a pure South African directors and shareholders, you might run into CFC issues. And so that is a controlled foreign company. And so that's where SARS can say, hey, but this company is in 100% owned in South Africa. It should actually be taxed and managed in SA. So that is why I always, that can happen. And that is why I always refer them to management accountants that deal with CFCs, controlled foreign companies on a day-to-day basis. I obviously specialize in getting people set up from a South African perspective, launch in SA, then expand into Delaware once your exposure becomes significant and you have what I call a fat bank account. If you have a fat bank account, you can afford management accountants who's going to charge you $100K a year.
That's US dollars, $100K US dollars.
In some cases, yes. And that's in the name of tax, tax avoidance. Like I think in South Africa, with the tax rate coming down to 27%, it's not a bad deal if you don't take a lot of money out of the company. I mean, I can see it coming down to 25% in the next 10 years.
Really?
Wow.
Sounds
like they're doing the opposite, if you ask me.
On the personal, here's why. SARS isn't collecting, they know they're not collecting enough on company income tax, but they know they are collecting the majority of their tax on the individual side. So that's why the individuals, they can maintain the high tax rates where they are. But companies, they need to find a way to lower the tax rate in such a way to allow more companies to say, hey, okay, let's push a profit through, because it's cheaper tax-wise to push a profit and pay the tax than pay the staff bigger bonuses.
Wow.
Because that has a bigger tax impact. So I can see, but that's a 10-year thing. I don't think it's going to happen in the next 5 years. It took them almost 8 years to drop it from 28 to 27%.
But I mean, radically bold, Andre, would be to go, let's drop company tax 20% and dividend tax to 10% and stimulate business growth. Like, get people to want to build profitable businesses, because profitable businesses do employ people. It's not as though they're not going to pay tax. They pay VAT, they employ people, they do all kinds of amazing things. So, I'd love a bit of a bold move like that to say, let's get the companies making money.
No, I'm 100% with you. And the other thing is, the benefit of having a company that's actually has big profits on their set of financial statements is it's extremely attractive for investors. What a lot of people don't realize is if you have a company that's making an after-tax profit of zero, or you keep on showing losses, sure, great from a tax point of view, you just pay all your staff and you post a loss, but try and get an investor to invest in you, no chance in hell. They want to see you making profit, and profit means tax,
So what other kind of future trends do you see coming around that, business founders, or maybe a business at scale, what kind of trends are you seeing outside of what we've discussed already?
I think the space in which I work and the consulting I do on a regular basis is the number of what I would call legitimate solopreneurs. They aren't scaling a business. They aren't starting a big business. What they're doing is they're working for one company, and SARS already changed the rules and say, hey, we realize you can't force a company to register for pay as you earn. We'll still have to deal with with your setup, but a number of South Africans who can now work for overseas companies, then what they do is they register a company, run it through the company in order to get more clients. And so you might end up seeing solopreneur entities with maybe 1 or 2 staff members, but it's in an extremely profitable export product. Is doing software work from SA, or doing software, AI, the developments in tech. I think also your graphics guys, your even your finance guys, but that's more hardcore. You must be in the office situation. But that's what I'm seeing. That's the trend now, is South Africans getting paid in foreign currency. And in order to solidify themselves, register a company, get this thing a bit more tax efficient, but not really on the startup and growth phase of companies. I think people still have third COVID, where they hurt from businesses. They went back to full-time employment, but definitely on the up is working for foreign companies.
So Andre, I want to go to your experience, as I know you've just started Irafu, which is your tax consultancy. Just kind of explain your journey as a founder, and sort of if you can give us advice that you would give to somebody with your lessons of going solo yourself.
I mean, it's been a crazy journey this year. We're 6 months into business and we're already into physical premises. And client growth has been amazing. I think the first advice that I would give is test your idea as a sole proprietor, and rather go into short-term revenue share deals if you want to partner up with somebody to see how it works. Maybe a profit share if they're involved in what you do. Don't sign a founder's document or a shareholders agreement unless you ran it past your lawyer and you understand what it's about. The last thing you want to do is marry your business partner and then you struggle to divorce them. That's kind of what happened with me, and why I'm running Irafu 100% sole shareholder as a business. And the partners that I work with are purely on rev share model, so I pay their share on things that they help me with. That is the advice. The second thing, in South Africa, please hire staff. If you want to be an owner-managed company and you don't want to have a company that you could eventually sell it someday, don't hire people. But if you want to retire at some point and make your company worth something, you need to be able to delegate the things that you have on your plate and be able to take. And the investors say, if you can't take a break from your business for a month, you aren't an investable business. So that is the growth trajectory. My advice, and that's where my growth as fund is going to, is helping people and helping businesses, small businesses, get to that point. Is what have you not done to build your company in such a way that you can step away from it? Let's say, can you take a break for 2 days? Okay, not 2 days. Can you take a break for a week? Okay, good. What about 2 weeks? That is I think the next big phase in SA. The final thing is, if you hire staff, have a very strong filter process of who you bring in, because in South Africa, you can't really fire people. You can retrench people, but you can't fire them. In America, you can hire and fire very, very quickly. In South Africa, you can't. So having a strong filter process of who you bring into the business will allow you to make the best hires. I can proudly say I've had 3 hires and I haven't made a single hiring mistake yet.
So Andre, just on the hiring and firing in America, don't you think that being able to do that actually lifts the level at which employees perform in America, right? Because if you know you can get fired on the spot, I mean, you won't be sitting around slacking and taking it easy, being on social, because that could get you fired, right? But in South Africa, because there's so much coverage, I just think it affects our national productivity and our national output, the fact that we cannot do that. And in a country, and I know our unemployment situation is quite special, but in America, I love the fact that they've got low unemployment. So if you do get fired, chances are you could get another job. And, it just makes it easier for companies to be effective and get the right people working and contributing value. It's so value-based. I love it.
Yeah. Yeah, I must be honest. I'm very stoic when it comes to certain answers and certain questions. I'm stoic with regards to the labor law in South Africa because I know labor law in SA is not going to be changing in the next 20 years. I like the American model, okay, but it's not the situation that we have in SA. So there you have to work with what you have. For example, one of my cheat codes is you hire graduates. They don't come from a past position. They are usually much cheaper. So as a starting point, just to see whether they can do the job, you have them on. And fixed term contracts are the bee's knees. You just can't have people on a fixed term for permanently. But if you put on a person for a fixed term of 12 months, that contract is coming to an end. The contracts that I would stay away from or keep away from are permanent employment contracts. I don't think IGAFU will ever have permanent employment contracts. I will say this is a 3-year contract. Let's review. And the other thing is they know that if they've got a big review, the contract is coming to a close, you can say you deserve a promotion. In South Africa, you have to work with what we have. I like the American model, but I'm going to be stoic and say, look, you have to do it. You have to make do with what you've got.
Yeah, I think that's good advice. I like that. Renier, any last questions for Andre before we let him go?
Yeah, Andre, maybe just a quick few steps. Like if you're a startup, tech startup specifically, like how would you get going? When would you establish? What kind of structures? How would you approach it? What would your advice be to a tech startup that's like just starting out?
Look, I know with tech startup, the big thing there is there's nothing to sell yet. Okay, so it's going to take quite a while to get product to market and to actually. So what I would do is I would say, how much cash do I have to actually establish this business properly? So the first thing I do, CIPC registration, cool. But then make sure you've got an accountant, make sure you have a bank account. And then from there, that is where you start saying, okay, what's the cash outlay on the first website, or how much do I want to spend on this on the tech build? And then if you want to, because the moment you want to start selling, you have those structures in place. And if you're a team, what I would then say is have a shield, define the roles clear from the start. So who's the executive, who's going to do the marketing, who's going to do, and having those differentiated roles ironed out in a it doesn't have to be in detail. I mean, startups love the whole thing. Well, everybody does everything. But if you have some defined roles from the start, that would be a good, but like I said, the best position to be in is get a company registered, have an accountant that knows how to help you with the bank account and getting that set up. So by the point you can start, paying for things, or you can send invoices, or you can start accepting payments, the structure, and what I should really call it, scaffolding. The scaffolding is in place. The foundation is in place. If you don't have a foundation, if you're a sole proprietor, you can start things as a sole proprietor, but then you have to do those things a second time, or in a more formal setting, in round 2. So those are the 2 options. You can start informally, putting your plans together, but then do a formal setup if it looks like it's got legs.
Love that. Great advice.
Andre, it's been great having you. But before we let you go, for somebody that's accrued up to 47,000 Twitter followers, 14,000 YouTube subscribers, has found yourself on SAFM and so forth, for all those content creators, including ourselves, I would like to know, what's your secret sauce?
I've got an unfair advantage. I've got ADHD. So as soon as something comes up in my mind, I would post it and see if it catches flames. I think consistency, if I were consistent, I would have been much bigger than what I'm at. And the second thing is the pie is big enough. I think people keep information and teaching to themselves, and that's why they don't grow. So if you have something valuable, you will grow over time. It's just it's just you can't not grow if you provide good value.
Cool. Well,
Okay.
Andre, we'll
Cool.
let you go.
So I really have to run my
Yeah. No, thank you very much. I appreciate it, and we'll be in touch.
No, it's a
Cheers,
pleasure.
everyone.